Assalamualaikum dan selamat malam. Welcome back to channel. Malam ni kita akan tengok cara live untuk Jerang Powell akan speak untuk malam ni pukul 9.10. So walaupun mana juga nak awal sikit, pukul 8.30 tapi kita isyak kan, so pukul 9 baru cantik sikit. So guys, welcome to channel. So pagi malam ni tentu kita akan tengokkan secara live. Nanti tu akan tengokkan sikit, tu akan kupaskan sikit apa yang Jerang Powell akan cakap kan. Tu nanti ikutkan di dia punya website ni sudah buka pun, website dia nanti kita akan tengok dalam pukul 9. Ikutkan dah bermula ni pukul 9, nanti tu akan tengok balik. Dia ikutkan dah bermula pun, cuma kita nak tengok giliran dia dalam pukul 9.10. So siapa tengok nanti tu akan ubahkan tu punya screen nanti. So klik
Short time ago, the Fed was worried about hitting its 2% inflation target.
So dia belum ni, kita ikutkan pukul 9.30 nanti. So dia pun akan mute dulu.
Average inflation targeting. The idea was to make up for shortfalls by temporarily allowing inflation.
Dia akan tengok balik pukul 9.10 ikutkan Jerang Powell punya speak dalam 9.10. So apa pun dia dah start pukul 9, nanti dia akan tengok kan. So apa kita tengok di coin market cap dulu. Apa yang berlaku untuk hari ni, coin market cap increase banyak 4.28%, cuma kita volume hanya rendah. So untuk tengok untuk hari ni banyak yang green banyak. Ikutkan siapa tengok Chibai, dia pula tengok kata Litecoin Lunasi dah lepas pun dia punya average. So kali ni dia untung dalam 10% daripada 3.1 juta je punya holding tu. Apa pun dia akan holding lagi. So untuk Lunasi dia ada expectation kan ada sedikit lagi untuk ada kenaikan, at least sampai kita tengok store RSI berada di overbought dan store RSI berada overbought. So meaning ada sedikit lagi amount, at least dalam 0.6 lebih. Kita akan ada berlaku peningkatan untuk di Lunasi sebelum kita ada sedikit correction yang agak besar lah, expect daripada mana-mana mungkin daripada low ni, swing low ataupun swing high. Tadi kita akan ada retracement balik kawasan dalam 0.4, drop balik below. Tak salah, dia akan buat holding untuk long term saja, biarkan saja. Dia akan bagikan tu punya channel untuk tengok key komen nanti di ruangan komen. Dia akan tengok balik. Okay guys, welcome to channel. So apa pun, let's go, kita pergi ke Litecoin, Bitcoin. Kita akan tengok Bitcoin dulu. So untuk Bitcoin, siapa yang tengok di technical, untuk secara technical tu sharekan pagi tadi. Kemudian untuk malam ni juga sebenarnya tu tengoklah sedikit bearish sebenarnya untuk di Bitcoin. Cuma kenapa tu ambil position buy untuk petang tadi ataupun pagi tadi 7.30 tu ada position buy. Tu ada maklumkan di Discord channel kenapa, dia akan terangkan. So untuk di BTC USDT, so ni tu ada measurement kuasa di 1 hour. 1 hour ada sikit kuasa momentum bullish. Kita ada bull flag ni, tu point of breaking ni sekiranya kita breaking untuk malam ni ada potential. So meaning apa-apa saja news daripada ataupun Jerang Powell punya isi ucapan tadi, kita akan dapat sikit maklumat. So bullish atau bearish nanti tu akan ulaskan. Tu akan cuba dapatkan seberapa banyak. Tu akan tumpukan sikit kepada Jerang Powell punya ucapan pukul 9.10 nanti, dan kita akan tengok. Tu akan cuba dapatlah beberapa isi penting. Kalau tu dapat tangkap nanti tu akan share kan, dan daripada maklumat tu akan tengok adakah kita boleh berlaku pump untuk hari ni ataupun drop ke bawah. Sebab apa, US market mostly dalam 9.30 ni buka, ikutkan pukul 8 kan dia buka, bukan SP500 atau buka pukul 9.30. 11.30 lagi baru buka US punya market. So mesti kita tengok balah akan ada pergerakan yang drastik. So apapun untuk di 1 hour tu ada betting ataupun tu ada expectation untuk price tu berikut bull flag ni, point breaking at least sampai ke kawasan kita dalam 20. Macam juga kan, kenapa 20 tu ikutkan pagi tadi tu ada jangkakan untuk kita akan berlaku sikit inverse and shoulder kawasan ni, expected ni, dan berlaku kenaikan, dan kenaikan ni akan trigger untuk kita punya journey untuk double bottom, iaitu double bottom yang ini. So kita jangkakan double bottom yang ni. So breakout ini barulah kita akan more naik atas, dan breakout ini maknanya kita dah breakout satu trendline ni walaupun tak kuat tapi dia boleh drive sikit price at least sampai balik ke kawasan normal dalam 29 sebelum kita ada drop. So apa pun kita tengok macam mana market untuk malam ni kita akan tumpukan kepada small time frame, iaitu akan tengok di 1 hour, iaitu yang ini. Kemudian kita tengok untuk pergerakan, aku akan tengok ucapan Jerang Powell pukul 9.10 nanti. So nanti kita tengok balik ikutkan tak belum lagi. So yes, hampir. So kita akan tengok secara live nanti. So akan mute dulu, kita akan tengok.
Family. And now let's turn to the 40th Annual Monetary Conference. It's my honor and pleasure to welcome Fed Chair Jerome Powell to the conference. Along with Alan Greenspan and Ben Bernanke, he's now the third chair of the Federal Reserve Board of Governors to address the conference. Jerome Powell was first appointed as chair in 2018 and then reappointed this past spring. And he's no stranger to the Fed. Prior to his time as chair, he served as a member of the Board of Governors starting just over 10 years ago.
That is okay.
The one certainty that seems to come with the position of Fed chair is that one will invariably face a time of great challenge. Paul Volcker confronted our last and worst bout of inflation. Alan Greenspan saw the stock market crash a mere 2 months after his confirmation. And Ben Bernanke led the Federal Reserve amidst the financial crisis of 2007 and 2008. And Chairman Powell, as we all know, has served throughout the COVID-19 pandemic and its aftermath, a period in which we've seen inflation reach its highest level in 40 years. As we've sat in front of Zoom screens over the past 2.5 years, I'll just speak for myself. Many of us have watched as our hair has turned grayer, but few of us have as good an excuse for this as Chairman Powell. We're delighted to have him with us today to have a conversation about key policy issues, what he's learned, and the challenges now facing the Fed. Chairman Powell, it's good to see you today, sir. Welcome.
Thank you very much, Peter. And thank you to, go ahead.
I don't think it's a failure of imagination on my part, nor do I believe anyone will be surprised if the first topic we turn to is inflation. As Jim mentioned, it seems policymakers were given, including at the Fed, were initially given a bit of a head fake on inflation. We heard policymakers ascribing the increase in price inflation to the pandemic and related supply disruptions. And while this has undoubtedly contributed, there seems a much stronger consensus now that it's been in larger part policy driven. Can you discuss for us or give us some insight into how your thinking evolved on this topic over the last 1.5 years and how those conclusions may have evolved as well?
So Peter, thank you. And Jim, thank you. And congratulations to both of you and to Cato on 40 years of great monetary policy conferences. So I think a good entry point for that question, Peter, is to start by recalling that before the pandemic, unemployment was at a 50-year low, inflation was low and stable, and the economy was growing steadily, with no obvious imbalances threatening continued expansion. So, of course, in that sense, none of this high inflation that we see around the world now would have happened without the pandemic. The pandemic severely disrupted the economy, gave rise to risks of much more dire economic consequences than actually transpired really. And that was thanks in part to the policy response. So to start with policy, there's no question that policy certainly supported strong demand. But in my view, you would not have seen anything like the inflation that we have seen without the pandemic effects. And those pandemic effects include both shifts in demand and also playing a role in, not solely causing, but playing a role in the supply side constraints that emerged. So as for the pandemic, it did lead directly to an extraordinary shift in demand away from in-person services and to goods. And that shift, of course, was a major contributor to inflation in goods prices, which was really the main inflation story at the very beginning when inflation broke out suddenly in March of 2021. It's worth remembering that inflation actually declined in the early stage of the pandemic and then suddenly rose up in March of 21. The pandemic also contributed to the constrained supply in a number of important ways, including a large and persistent reduction in the size of the labor force, which contributed to extremely tight labor market conditions and upward pressure on wages. Also, the turmoil in global supply chains was probably caused to some extent by pandemic-related shutdowns as well as strong demand, and particularly goods demand. I think cars are a good example. So yes, people had money and rates were low and demand for cars was strong, but also the pandemic shifted demand upward for cars because some people wanted to avoid public transportation. That amped up new demand for new and used cars. And also the shortage of semiconductors for cars emerged from pandemic-related demand shifts as well. So the bottom line for me is that there's really a role for both here, and the two are tangled up in a way that it's really not easy to disentangle.
Those of us who grew up in the 70s, I think that the danger and cost of inflation, can't be exaggerated. In September of 1979, his first testimony, a month after he was confirmed, Paul Volcker made clear he understood the damage that was being caused by inflation and the need to bring it down, even if it required great costs in other economic ways. One of the lessons of that episode was the greater the extent to which inflation slips the leash, the higher the cost and greater economic damage necessary to bring it under control. I worry whether we have the resolve to bring inflation under control today, to face the potential economic costs. I took some comfort from your recent remarks in Jackson Hole, which seemed an attempt to signal that kind of resolve. But I do remain concerned that, the intense political pressure that might be brought to bear to avoid collateral economic damage before the inflation fight is won. And I just wondered if there's any way you can help me sleep a little bit better on that score.
Sure. So I think it's worth going back and remembering, and I pointed this out in my remarks 2 weeks ago at Jackson Hole, 10 days ago, that what Paul Volcker did and the Fed did to finally get inflation under control followed several failed attempts to get inflation under control. And what had happened over the course of that long period of the great inflation is that the public had really come to think of higher inflation as the norm and to expect it to continue. And that's what made it so hard to get inflation down in that case. So it is very much our view and my view that we need to act now forthrightly, strongly, as we have been doing, and we need to keep at it until the job is done to avoid that. We think we can avoid the kind of very high social costs that Paul Volcker and the Fed had to bring into play in order to get inflation back down and set us up then for a long period of price stability. That speech, the point really there was to deliver a speech that was narrowly focused on inflation, more direct and a lot shorter than a typical Jackson Hole speech. And I thought that what was appropriate was a very, kind of concise and focused message. To your question, the message really was that the Fed has and accepts responsibility for price stability, by which we mean 2% inflation over time. That, again, to your question, the longer inflation remains well above target, the greater the risk that the public does begin to see higher inflation as the norm. And that has the capacity to really raise the costs of getting inflation down. So finally, history cautions strongly against prematurely loosening policy. I can assure you that my colleagues and I are strongly committed to this project, and we will keep at it until the job is done. I can also assure you that we never take into consideration external political considerations. We are accountable to the public through Congress. That's a very fundamental, important aspect of our work. But we do not. We focus solely on the goals that Congress has given us, and that's what we're going to do here.
I think that that's really important, because it's clear that we could see political pressure coming to avoid economic costs when there could be claims from political players that inflation is back in its box long before it is. Jim mentioned in his opening remarks that 2 years ago you moved to a new framework, flexible average inflation targeting, and I'm bringing this up now because again, just reiterating the point about trying to sleep better at night. By many accounts, this move has created some more uncertainty in the market, as Jim mentioned, and coming at a time when inflation now has increased so markedly, it creates concern that despite your stated resolve, the commitment to price stability has become less strong. Should you consider modifications to this framework to assuage these concerns and better manage short-term expectations?
So the framework, we began the work on the new framework in 2018, and we announced the results in August of 2020. And it really followed 25 years, basically, of global disinflationary forces. And the problem was that monetary policy rates were close to the effective lower bound much too much of the time, much too close, and even during good times. So that meant that central banks were having a hard time all over the world, finding ways to support the economy when it was needed. And that's why central banks, including the Fed, resorted to things like forward guidance and asset purchases. So that's why we did that. But the changes that we made were sort of a very mainstream part of a literature around makeup strategies. But really the point of our framework changes, the point of all of them was to, and we said this very clearly, was to have inflation expectations well anchored at 2%. That the average inflation targeting idea was meant to support having inflation expectations. That is the goal at 2%. And the reason is that we believe that the public's expectations of future inflation will play an important role in the actual path of inflation. So that is kind of the fundamental basis of our framework. And as I just discussed, it is very important that inflation expectations remain anchored. I think the evidence today is that if you look at longer term expectations by households, businesses, and forecasters, and also markets, you'll see that they are pretty well anchored around 2%. Of course, short-term expectations are higher because of high current inflation, and also the clock is ticking. As I mentioned, the longer that inflation remains well above target, the greater the concern that the public will start to just naturally incorporate higher inflation into its economic decision making. And our job is to make sure that doesn't happen. And we're committed to doing that job.
It seems to me there's a chance that there's a real risk that the labor market, that the labor shortages persist. Does that create a risk that takes some of the ability to manage this process out of your hands? To the extent that there continue to be labor shortages, does that then feed into expectations that the public has about inflation, as you mentioned very prominently?
Well, I think you're right that if it does turn out that we are in a world of a persistent labor shortage over time, that'll be a challenging world for companies, and it will certainly create upward pressure on wages and that sort of thing. Today, the labor market demand is very, very strong still in the labor market. We're still printing new payroll job numbers at a high level. Wages are running at elevated levels. And so we think by our policy interventions, what we hope to achieve is a period of growth below trend, which will cause the labor market to get back into better balance. And that will bring wages back down to levels that are more consistent with 2% inflation over time. That's what we're trying to achieve. The shock to labor supply that we got from the pandemic was large and unexpected, and unfortunately persistent. I will say that just in the very last labor market report that we got last Friday, we did see a welcome increase in labor force participation. Nonetheless, still a full percentage point below where it was before the crisis. And I think it's important as a society that we have measures in place to support a strong labor market and high labor force participation. And that goes beyond what we can accomplish with monetary policy.
You've made some contrast to how things are different today. What's different today from the high inflationary period of the late 70s and early 80s. I guess some other distinctions are, I remember as a student in Boston in the early 80s, in the days before the internet, I remember seeing people actually line up at the Fidelity office to see the monetary aggregates released on a weekly basis. And the way the money travels through the economy has changed dramatically since Milton Friedman first said that inflation's always and everywhere a monetary phenomenon. I'm just wondering, how do you respond when people look to the huge spike in government spending and say, I think you answered this in part in the first question, but that when you look at the huge spike in spending and say the Fed's printed all this money, so of course we have inflation.
So I graduated from college in 1975, which was close to peak monetarism, and there was quite a focus on monetary aggregates, and I recall it just as you do. So to go to this current situation, so as part of our response to the pandemic, we did resort to large asset purchases to address what were pretty severe disruptions in markets, and then also to support the economy, and our balance sheet expanded dramatically. But remember that our purchases of securities don't actually increase the quantity of of government obligations held by the public. They really change the mix because we issue bank reserves to pay for those securities. So we're not changing, the quantity of obligations. That is not to say that money growth wasn't high. It was, of course, extraordinarily high in 2020, and then slowed down in 21, and now is quite sluggish. And I guess I would just say it this way: whatever caused, there are different theories on what caused the inflation that so suddenly jumped up out of the ground in March of 2021. Whatever that cause was, the relationship between the money supply and inflation, economic output, has been much more unstable than it was in Friedman's day for a very long time. And so literally changes in monetary aggregates have not had a consistent, reliable relationship. They haven't been a good predictor of the economy or of inflation. Now, of course, the economy is ever changing, and that too could change, to where it is important again. But for now, and for really many years now, monetary aggregates don't play an important role in our formulation of policy, and we don't think they're generally a good way to think about policy or about inflation. It's more about demand and supply and things like that. So that's where we would be on that.
That actually calls to mind, at Cato, we do have a strong aversion to a fully discretionary fiat money system. And so we do like to socialize and promote alternative frameworks that could move policy and a market direction that eliminates some of this discretion. Jim mentioned that a consistent theme over the years of this conference has been, potential monetary rules. And that kind of calls into question whether inflation and prices are really the best targets to use for monetary policy. Some folks have advocated for a rules-based system, such as targeting nominal GDP is something we've heard a lot about in recent years, partly because, as you say, monetary policy is not suited to address, well suited to address supply shocks. Could you share with us some of your thoughts of that type of approach and whether it's something that you would consider?
So more broadly on rules, of course, Taylor rules have become part of the fabric of economic analysis and particularly monetary policy analysis in ways that must be far greater than John Taylor could have hoped when he wrote his original article in 1993. So, but no central bank, and the Fed has never explicitly tied our monetary policy decisions to any formula, including Taylor rules. But Taylor rules, nonetheless, are ubiquitous in all of the work that we do. You have to have a variable, or a way and a model of explaining how monetary policy will react, and some kind of Taylor rule is now very much part of the way we think. In terms of nominal income targeting, and by the way, I know that Cato is one of the home courts for nominal income targeting, along with Mercatus and some others. And I know that this is a lot of well-known experts, many of them at your institution, do support nominal income targeting. And I'll just say that, we've looked at that. I've looked at that and really come to the view that nominal income targeting is not the right way to go. And I'll try to explain why. By the way, I know that these arguments are well known to nominal income targeters and will be found to be unpersuasive. But nonetheless, I'll just give you my
and one thing I would interject is that we have debates internally as well, and I think for us the concept really is more, wanting to socialize a number of alternatives and try to move towards alternatives that do have more of a market basis, and again remove discretion.
I think that's a very healthy process, and the whole debate over many years about rules and discretion is a fascinating and important one that is far from over. So it's really a mix of the two. I think but getting to nominal income targeting, we've got a dual mandate: maximum employment and price stability, and it comes down to, is nominal income targeting the best way to promote that? We don't think it is. I don't really think it is, and part of that just is that it would be, I think, very difficult to explain to the public the relationship of a nominal income target, nominal GDP target to those goals. It's a level of complexity that, even some economists and policymakers struggle with, let alone the general public. So it seems like it would be a reach to sort of put that, for us to have that be our fundamental framework. And a couple of examples that would be difficult One in particular would be, what do you do with changes in trend growth? We have, highly uncertain estimates of levels of trend growth that we amend down through the years, and many years later, we may have a very different view. But it is broadly understood, I think, or believed, thought that trend growth has declined considerably rather, over the course of the last, since the global financial crisis. So how do you incorporate that into a nominal income target? Do you just raise the contribution of inflation, or do you annually re-estimate trend growth? And if you do that, you're incorporating both communications issues, but also, just big chances of policy error, because we just don't know these things with that kind of, we don't know any of the starred variables, so to speak, with that level of certainty. So I'll just say it's really interesting, and it works very well in models, but it seems difficult to implement from a practical standpoint, and it's not something that we have chosen to do, or that we are currently looking at.
You mentioned the dual mandate. I don't want to ignore the unemployment rate during this conversation. When I said earlier that, we obviously have an aversion to a, fully discretionary monetary system, many of us also regret the adoption of the dual mandate in lieu of a strict focus on monetary stability. The Fed's own website acknowledges that maximum employment is driven mainly by non-monetary factors. And if we accept that, does it really make sense for employment to be part of the Fed's mandate?
So, Peter, as you know, we're created by Congress in statute, and Congress assigns our goals, and it has assigned maximum employment and price stability. It's my view that the dual mandate has served the public well and is generally workable. In particular, at the moment, I don't see the two goals as in conflict at all, because without price stability, we will not be able to achieve the kind of strong labor market that we want for a sustained period that benefits all. So I don't see a case for moving to a single mandate, but that's really a question for Congress, and we will of course implement whatever mandate Congress gives us. To your point about maximum employment, it's true that, and we do say that and have for some time, that non-monetary factors are really what drives the level of maximum employment, which clearly changes through the business cycle and over time. But we can and do assess that, and we do it transparency, and Congress has said that should be a goal, a co-equal goal with price stability. So that's what we're implementing. And again, I don't think there's a strong case for changing that. I don't think it hampers us in our pursuit, and I think we can achieve both goals in the medium term.
You stole my follow-up, because you started out saying Congress sets the mandate, and so my follow-up was going to be, well, should the mandate, should they consider changing the mandate? And I think you've answered that. But I guess a natural follow-up might be then that if the dual mandate weren't enough, there's been talk of adding more elements to the Fed's objectives, including like racial equity that seem far from the Fed's ability to address. In addition, the Fed's remit has expanded from the banking system to the broader financial system, and its regulatory responsibilities were widely expanded in the wake of the financial crisis. How does continuing expanding the Fed's mandates not undermine focus on that fundamental responsibility of monetary stability, beyond things such as the employment element of the mandate?
So I think our current mandate is appropriate, and I would not want to see it narrowed or broadened, for that matter. We've got narrow and we've got well-defined goals that we're supposed to pursue. And what we've gotten with that is a precious grant of independence that lets us pursue those goals without direct political control. For monetary policy, that's maximum employment and price stability. And I think that dual mandate has served the public well. I really don't think it would not be a good idea to broaden it to goals that might be inconsistent with those two mandates, and that would be very difficult for us to achieve with our tools. More broadly than that, though, I think it's really important that we stick to our assigned tasks and resist the temptation to take on issues that are the province of elected representatives or of Congress. And if we do that, if we do stray from our core mandates, that will eventually undermine the case for our remaining independent. And I think, Fed independence is an institutional arrangement that has served the public well, and I think that's pretty well documented and accepted.
I mentioned a couple of times, our concern about a fully discretionary system, and one of the biggest of those concerns is that in the face of, large economic dislocations, we've been running, what really amount to unprecedented experiments. I would cite the, quadrupling of the Fed's balance sheet in the wake of the 2008 financial crisis, and then, doubling it again during the pandemic. To your credit, it was right before the pandemic that you were beginning to move towards reducing the balance sheet. Could you shed some light for us on where you hope to take the balance sheet over time, and what's the way that you really try to get there? Do you see the Fed ever moving back to a scarce reserve framework like it had before the 2008 crisis?
Sure. So in the last cycle, after we ended our asset purchases, we froze the size of the balance sheet in 2014 and then allowed it to shrink passively relative to the size of the economy for about 3 years. So as the economy grew, the balance sheet didn't grow. Then in 2017, we began to allow maturing assets to run off, and that process went on until 2019. By the end of that period, we had a balance sheet that was significantly smaller relative to the size of the economy and smaller than it was overall. So then we resumed asset purchases, as you know, 2020, and once again now we are embarked on shrinking the balance sheet, and the test will be back to levels that satisfy the public's demand for our liabilities. That's currency and reserves and things like that, but also with reserves maintained at levels that are consistent with our ample reserves regime. So the balance sheet is substantially larger now, obviously, and consequently the runoff process is designed to be substantially faster than in the last cycle, to the tune of on the order of $1 trillion of runoff per year. That process began in June. Once it's up to full speed, process began in June, and the pace of the balance sheet increases actually rises this month. The plans are spelled out in detail on our website around the January and May meetings. And of course, one thing we always say is that we're prepared to adjust the details of the plan based on economic and market developments at any time. As far as returning to a scarce reserve regime, I guess I would say that I think that our current operating framework is a better one, and I don't see a case for returning to scarce reserves. Now, why is that? So the world has really changed as a result of the global financial crisis and the pandemic. The scarce reserves framework would be challenged to work in a world where there's very high and sometimes volatile demand for safe and liquid assets. Central banks may need to rely on large-scale asset purchases again from time to time in response to severe shocks. And remember that the large financial institutions hold very, very large quantities of safe assets now as a liquidity buffer, and that includes a lot of reserves. So the bottom line is that the quantity of reserves is just so much higher. It would seem to be impractical to try to manage scarcity, and demand will be volatile too. So it doesn't seem practical. And again, we think that the current system works well and provides a lot of liquidity to the system, which is kind of a net gain.
All right, I thought it might be time to shift gears a little bit away from inflation and monetary policy. I remember in the first year I joined Cato, I read an op-ed in the Wall Street Journal advocating for the Fed to implement a digital currency. And I was kind of horrified at the privacy implications of this prospect and said so in a letter to the editor at that time. Since then, the Fed has formally stepped into the digital currency ring, and digital currency has obviously been a very recurring theme in these conferences, but the Fed has stepped into this arena with a discussion paper on a central bank digital currency and several speeches from Fed governors. Our team has reviewed the more than 2,000 comments that the Fed's central bank digital currency discussion paper received, and we find that about 2/3 of them are concerned or outright opposed to the idea. Commenters raised concerns of financial privacy, financial oppression, and disintermediating the bank system, some of the same concerns that led me to write that letter to the editor 7 years ago. How can these serious concerns about privacy and freedom be reconciled with a digital currency?
Let me start by saying that we haven't made any decisions at all about whether to issue a CBDC, and we continue to evaluate the pros and cons and look at the technical questions and the policy questions, and we expect that evaluation process is going to take some time, appropriately so. Secondly, I'll say that we do not intend to proceed with issuance of a CBDC without clear support from both the executive branch and from Congress, ideally in the form of a specific authorizing law. So we did get, it was very gratifying, 2,000 and some comments. And, you know, I won't tell you that I've read those, but I've read all of them, but I've read some of them and I've read the summaries. And, you know, it's a lot of very thoughtful concerns, including the ones that you raised. And there are things that we're considering very seriously. So we in our own paper, we suggested that a CBDC in our jurisdiction should be privacy protected, intermediated, widely transferable, and identity verified. So on privacy protection, let's start with that. Very, very important. And, you know, we all see what's happening with the digital RMB and you know, and the issues with privacy. We would not want a world in which the government sees in real time every money transfer that anyone makes with a CBDC. That would not be something that would be at all attractive in the American context. So privacy protection is going to be extremely important, and we're attentive to striking a balance, of course, between law enforcement and privacy protection. But that can be managed in the same way that it's currently managed in the banking system, or in some similar way. In terms of another issue, really is disintermediation, and you know that really is a question of, if say you had an interest-bearing CBDC, it could be attractive. It could compete with deposits, could draw deposits out of the banking system. That could limit credit availability. That's another issue to be managed. I think one of the things that actually that Cato mentioned in your was also the run risk issue, and that is the question of, are you creating an asset that would be very attractive in, you know, in a panic or severe stress situation, and you know, fostering runs. So look, it's going to be, as I mentioned, it's going to be, we think our role is this. We want to carefully and thoroughly analyze the public policy and technological challenges, public policy trade-offs and technological challenges. That's what we're doing. The idea is that this will lead all of us to a better understanding of those trade-offs and prepare the way for, hopefully, a well-informed decision on whether and when to issue a dollar central bank digital currency. That's what we think our role is. And we think that the Fed is the right institution to do that. We can proceed without, you know, we're a nonpartisan institution, non-political institution that we can do these things, and I hope present conclusions and analysis that will support an intelligent decision when it's time to make that.
Well, this is something we'll definitely be having a lot to say on in the future, as well, particularly from a perspective of, you know, of privacy concerns. That's being a watchdog on those issues, you know, is a very important role for Cato. I do want to ask about cryptocurrency, you know, but first I should probably, in fairness, reveal that the gentleman who photobombed Janet Yellen 5 years ago by holding up a buy Bitcoin sign behind her during her Humphrey Hawkins testimony earlier this year became my son-in-law. So that's a little bit of a disclaimer I'm going to put out there. But without debating the merits or future of cryptocurrencies generally, or one or another crypto products, I'll say that in the monetary arena, you know, Cato stands for nothing if not a desire to see more interest in monetary policy, to see more people concerned about our discretionary fiat system. And also, we want to see private market innovation and experimentation in developing alternatives. And crypto is just such a great example of this. There's a long history of government and regulation thwarting such innovation and experimentation, which you know, we find really disappointing. So I wonder if you could respond to these kinds of concerns, namely that, you know, regulators might ultimately strangle you know, crypto to the extent that it really does develop into a viable alternative system.
So I'll talk about it in two pieces. One is unbacked cryptocurrencies as such, and you know, those have not and don't appear to offer, have not offered and don't appear to offer much in the way of public interest in using them as payments. Let's say it's not a great store of value. What it is a speculative asset. It's not backed by anything.
There could be an argument that that's still during the development phase, and that it's something that we could see emerge. But
yes,
be that as it may.
And I also have close in family members who offer that perspective vigorously. So, as you suggest. But stable coins is a different thing. And, the question is, are there forms of private money like stable coins, which can play a role in our financial system, which would, and the answer is, of course, that we don't want to stand in the way of appropriate innovation, particularly including, digital innovation. But we think that something like that, which is, purporting to be money, would need to be appropriately regulated. And I hear that wide agreement on that, by the way, from a lot of the stablecoin companies now are seeing that as part of getting to a place where they are a legitimate part of the financial system. So I think you need regulation. If people are going to think something is money, then it needs to actually have the qualities of money. And if it doesn't, then you don't want. I don't think you want to take money and make it into just another consumer product where sometimes it fails and sometimes it's good. You want it to be guaranteed to be good. If the public's going to look at it like it was a dollar, you want to have clarity, transparency. You want to have full reserves of very liquid, high quality assets, and things like that. That's all. So I think that we need legislation on this. Just it's typical of technological innovations. There isn't a regulatory framework that really gets after payment stable coins. And so I think that's what's needed. But I wouldn't think of us as being opposed to that kind of innovation. We're more the people who are saying, among others, that we need appropriate regulation.
Yeah, and the devil's ultimately in the details. I mean, while we have these debates, I mean, we would concede, we're living in a world where we will see innovation, and we've basically promoted, a light touch, market focused approach, because there is a real risk of again, having an impact on the development of these innovations and really thwarting what could be very promising and useful innovation.
No, and I agree with that. We don't want to be in that place. We want to be in favor of innovation, but also of appropriate regulation.
And ultimately, some of the people who end up driving, the regulation might be, as you mentioned, legislation. The end product may not meet the objectives that you and I both say that we want. Another topic, as long as I can remember, successive chairmen have warned of our unsustainable fiscal path. Regrettably, no one in Congress or the White House seems to be listening. I'm, particularly during a period of high inflation, I've been, continually chagrined at, the number of big spending bills that continue to come down the pike and legislation that's passed. Long after I think the crisis of the pandemic has ended. The lessons of the financial crisis and COVID might be that keeping our fiscal house in order is essential as preparation to meet the challenges of unexpected but inevitable, economic dislocations. But the opposite lesson seems to have been learned, that we can keep spending, whatever we wish without worrying about a day of reckoning. And I just, I'm very concerned about the day of reckoning and what risks we're laying for the economic well-being of future generations. And I just wonder, your thoughts on those concerns and the potential timing of that day's arrival and its consequences, and whether you have any ideas about how we can build a real constituency for fiscal responsibility in America.
So I do share those concerns, and in fact, I was working on those issues before I joined the Fed. But at the Fed, my position needs to be that fiscal policy really is the responsibility of Congress and the administration. Wouldn't be appropriate for me to comment too much on specific policy proposals or laws. More to the point, with inflation running so far above 2%, this is probably an especially good time to focus on achieving our own mandate rather than doling out advice to others. But like my predecessors, I'll point out that our federal fiscal policy is not on a sustainable path, and it really hasn't been for some time. And we will need to get back to a sustainable path sooner or later. To your point, sooner is better than later. And I guess I'll just leave it at that.
All right, thanks. We're getting close to the end of our time, so I'm thinking about a closing question. I wonder, with everything that we've discussed thus far, what are some of the key lessons that you've learned since you became Fed chair? And what advice might you give to a lot of the young, monetary scholars out there that Cato and other places are working to develop?
So I guess I would say that both experience and also studying history are great teachers of what can be hard lessons. And I actually mentioned 3 lessons at Jackson Hole 10 days ago, and those were first that the Fed does have and accept responsibility for price stability. Even now, some are questioning that, but that to us is settled. Secondly, that inflation expectations are really important and need to be carefully monitored, because if they do move up, they can make the job of getting back to price stability so much harder. And third is that the record is there is a record of failed attempts to get inflation under control, which only raises the ultimate cost to society of getting under control. Hence the need to do this job now and keep at it. So those are 3 lessons. I would say more broadly, another really fundamental lesson is, to me, is that the structure of the economy is ever changing and highly complex. And we see that today around the world. Many nations are experiencing the first high inflation in 40 years, all around the world. Different countries have different composition and backstories, but it's really quite global. And the question really is this going to be a temporary thing that's really related to the pandemic in some way, or is there actually something more structural and persistent happening? For example, if we're moving to a world where we're going to see more frequent, larger, and more persistent supply shocks for whatever reason, that will have critical and difficult implications for the conduct of economic policy and monetary policy in particular. So this is not possible to know right now, but it's certainly a question that looms. I mean, to sum it up, I would just say economics is not physics. There isn't any specific temperature at which the economy boils over. It does boil over from time to time, and when that happens, it often takes many years of analysis, discussion, and debate to reach general agreement on why that has happened. So the point is that we are always making monetary policy under high uncertainty about the structure of the economy and the path ahead. That makes our work challenging. It also makes getting it right very important for the people that we serve, and we do think about that every day. So our understanding of the economy has to evolve. As the economy evolves, as time passes, we do learn more, and I think it's okay to follow the evidence and change one's mind. I think advice to scholars young and old is that people shouldn't be afraid to say that they've changed their view and explain why. I actually find that refreshing when people say, my view has evolved in the face of the evidence. I guess one more word to close for those young researchers you mentioned, and this is a commercial for public service and for the Fed. So the Fed is a very special place where people can combine policy research with policy making. This is a place that all of us have a very strong sense of mission in our work, which is very satisfying. And that mission is to serve the public. And it really matters. Our work really matters to the public. I would say there's no higher calling or more satisfying mission. So I hope that young researchers and economists and others will consider public service as part of their career. For me, it's been only a part. But in particular, consider working at the Fed, where you'd be most welcome.
Thanks for that. I mean, I share those sentiments. As you mentioned your work at the Bipartisan Research Center, and I'm at Cato because I care about the future of our country and the future, of course, of liberty and freedom in America, and for the kind of world future generations are going to grow up, and whether they're going to have the same opportunities that we all have had to live in a free country and to pursue their American dream, and being part of that is a real privilege. I know, at Cato, we work very hard to raise consciousness of monetary policy and the potential for monetary reform. We wish that, we think this is a very important topic, and that more Americans should pay attention to it, even though it's complicated. We wish there were more policy organizations that would prioritize this policy area and raise their level of resources dedicated to this area. And as you know, Mr. Chairman, Cato is not shy about being critical, and we enjoy intellectually jousting with you and your team, but we also recognize that we share common goals and objectives for our country, and it's in the country's best interests by which that jousting and those debates and areas of disagreement, it's within that context that they occur. And so I do thank you for your work. You're in a challenging position, and I thank you very much for being part of this conference today. It's been a real pleasure.
Thanks, Peter. The pleasure is mine too.
Thanks so much. And with that, I'm just going to let all the viewers know that we're going to be taking a break now until the top of the hour. So we're going to reconvene with the next panel at 10 a.m. So we'll see you then. Chairman Powell, thanks very much again. Have a great day.
My pleasure. You too.
Okay guys, so banyak nak cakap lah ni. So banyak yang isi yang dapat agak sebenarnya, baik untuk kripto dan untuk long term sebenarnya. Short term macam mana nak cakap 10k masih lagi kita punya on track. Nampak lagi kita punya analisis 10k tu mungkin dapat ada rezeki untuk end of the year. So apapun untuk short term, mungkin kita akan sikit pump untuk news malam ni. Kenapa? Dia tu akan tunjukkan sikit. So untuk malam ni kita akan terang sikit kenapa Bitcoin ataupun chart kita tonton. Nanti tu akan on balik tu punya aircon ni, balik auto cool. Okay, kita akan tengok untuk chart di DSY. Kita akan DSY. So kenapa DSY awal-awal tadi melakukan pergerakan pump. So pump ini nanti tu akan terangkan sikit, nanti tu akan ulaskan sikit apa isi yang tu dapat untuk di dalam Jerome Powell punya quarter speech tadi. So ada sedikit data untuk long term dan short term nanya. So pertama kita akan tengok DSY. Kenapa DSY melakukan peningkatan tadi dan belah berlaku rejection. Rejection nanti kena terangkan kenapa berlaku sikit rejection. So untuk pump tadi sebenarnya yang mostly tu tambah adalah disebabkan kita ada shock news lah. Ataupun kita akan ada sedikit kata news daripada kata Europe. Kenapa Europe? Nanti kita tengok Europe. Kalau siapa yang kata tengok awal tadi ataupun kata alert dalam 8 suku tadi, kita ada kata interest rate untuk di Europe sebenarnya tinggi lah, daripada target 0.5 tapi 7.5 base point. tu tinggi banyak, atau tinggi dalam masa 40 tahun tak silap tu. Nanti kita akan tengokkan di CBNC. Kita akan tengokkan CNBC ada tak yang kata di yang ni. Nampak European Central Bank release rise by 75 base point tackle soaring inflation. Tak lihat tu yang ni yang tertinggi dalam masa 40 tahun. Nanti kita tengok kan, kita akan tengok summary kat sini, iaitu mark high largely price at 75 base point, ataupun kita tengok dalam 0.75 base point. The move follow move 0.50 jadi meeting. So meaning daripada target 50 base point dinaik ke 75 base point. Central Bank which set monetary policy for 19 euro using nation have kept rate is negative since 2014 bits per pinning and combat low inflation. So inilah disebabkan untuk fight inflation. So meaning untuk di Europe sebenarnya, kalau kita tengokkan mungkin pair euro, duit euro lebih jatuh daripada dolar. So bukan, kalau ikutkan Malaysia pun sebenarnya 2.5. Ramai cakap tu ekonomi Malaysia tak bagus semua. Ini bukan ekonomi Malaysia, ini kata worldwide punya masalah sebenarnya. Dolar melakukan training. Kenapa dolar melakukan training? Disebabkan tadi, even untuk long term tadi, Jerome Powell tadi ada cakap tadi untuk di dalam dia punya speech, kita tengok untuk dia akan disebabkan first dia akan demand terlalu tinggi. Disebabkan demand terlalu tinggi, kemudian apa berlaku bila demand tinggi, kemudian kita ada isu pula supply chain yang berkurangan daripada COVID itu. So ini untuk secara long term kita still lagi kita tengok demand tinggi dan supply chain berkurangan. So ini kita akan tengok harga akan terus meningkat. So ini akan kita tengok akan inflation akan terus melakukan peningkatan. Kemudian kita tengok untuk job claim job claim. Nanti kita tengok ada sikit di news lah tu, tengok awal-awal siapa yang perasan tengok job claim, ada job claim juga di US punya, ada continuing jobless claim. So ikutkan sini kita tengok initial jobless claim target 2.40 tapi 2.2, tapi low daripada yang target 2.40. So meaning apa yang berlaku, tengok kadar pengangguran tu kuartal tak tinggi pun. So meaning apa yang akan effect, di effect sebenarnya lebih banyak purchasing power. So bila purchasing power align dengan apa Jerome Powell cakap tadi, iaitu kita tengok berlaku demand yang tinggi. Kenapa demand tinggi? Disebabkan, senang cerita nak cakap macam mana, kalau ramai orang bekerja, ramai orang dapat gaji. Bila ramai orang dapat gaji, ramai ada purchasing power. Bila ada ramai purchasing power, banyak duit, banyak orang berbelanja. Bila banyak duit, itulah kata demand yang tinggi. Tapi apa berlaku, kita punya supply ataupun barang tu berkurangan. Sebab itu kita tengok harga terus melakukan peningkatan. Sebab tu tengok banyak inflation. So macam mana nak kuat reducekan ni? So sebenarnya kalau ikutkan tadi, dia Jerome Powell dia cakap polisi akan terus diperketatkan. So meaning terus diperketatkan bermaksud dengan apa? Bermaksud dia akan terus fight inflation dengan apa? Mula kita akan tengok dengan kenaikan inflation, kenaikan interest rate, seperti mana kita tengok di euro, ataupun kita tengok di mana dia untuk tadi. Okey, yang ni kita nampak base 75 basis point. So polisi itu diperketatkan. So bila polisi ni diperketatkan, apa berlaku untuk long term ni? Long term kita akan tengok lebih banyak kuartal monthly punya. Contoh siapa yang ada loan di Malaysia pun, kita pun dah, Bank Negara Malaysia pun dah naik 25 basis point lagi, iaitu kepada 2.50 sebenarnya, tak betul. So meaning siapa-siapa yang buat loan, even though sini pun effect juga, tu ada loan ESB. So loan ESB tu akan increase. Even sebelum ni pun dah daripada RM786 monthly dah bertukar jadi 816. So kenakan another 25 base point ni kepada 2.250. 25 basis point di Malaysia tu, tu tak tahu, mungkin akan ada berlaku peringatan lagi dalam mungkin dalam 830 dia punya total quarter monthly punya payment. So apa saja jenis loan di Malaysia ni akan berlaku peningkatan dengan kenaikan OPR ataupun di Malaysia. So sama juga di Europe, sama juga di kuartal US akan berlaku peningkatan. Untuk apa? Kita nak fight inflation. Kenapa? Kita nak reducekan demand. So nak reducekan demand apa? Kita yang ini kuartal dalam market ataupun kuartal jahat, bukan jahat lah, kita tengok macam government nak reducekan peluang pekerjaan, nak reducekan kuartal, nak beri company penambahan kos. Bila penambahan kos tu apa berlaku sebenarnya, kita akan nampak akan ada pengurangan. Bila penambahan kos kuartal production, company perlu reducekan kuartal kos untuk monthly. So nak reducekan monthly, selalunya dia apa? Dia akan nak reducekan supply. Tak boleh, sebab supply tu dah berkurangan. Tu dia akan reducekan pekerjaan. Bila reduce pekerjaan berlaku, kita akan ada reduce demand dalam market. So itu yang kita nak dalam market nak reducekan inflation, kita perlu reducekan demand, kita perlu reducekan purchasing power. So nampak sikit dia punya mainan kotor kan, tapi itulah yang perlu berlaku. Dan hopefully kata sektor-sektor tertentu sajalah yang akan effect. So kalau ikutkan di Malaysia pun tengok, walaupun kita ada di COVID pun kita punya Malaysia punya purchasing power still lagi tinggi. Sebab tu tengok kenapa harga-harga terus melakukan peningkatan. So selagi itu tak kembali kepada paras normal atau paras normal tu banyak, kita tengok demand dan supply itu balance. So currently kita tengok demand tu terlalu tinggi tapi supply itu berkurangan, disebabkan apalah, banyaklah COVID dan juga polisi-polisi yang lakukan ni menyebabkan supply berkurangan. So demand tinggi, bila demand tinggi, sebab itulah harga-harga sedang melakukan peningkatan. So apa lagi kita tengok tadi, itu yang kita secara long termnya, meaning kita akan tengok another secara quarter kita akan tengok dolar akan terus melakukan peningkatan. Tapi untuk short term tu ada expected untuk berlaku sikit dropping untuk untuk short term. Tapi untuk long term still lagi expectation untuk Bitcoin boleh sampai lagi dalam around 10k. Sebab apa? Kita ada long term, kita ada terangkan sebelum ni, kita ada downtrend ni pun belum complete lagi. So expected mungkin naik sampai 19-20 tu, kemudian kita akan ada massive drop untuk last apapun. Hopefully untuk di Bitcoin ada gain untuk at least dalam 23 sebelum. Untuk apa? Kenapa 23? Sebab apa? Kita ada bear flag ni. Bear flag ni ikutkan di 4 hours. Kalau secara technical kita belum test lagi. Apa tu test? Maksud betul breakout retest, belum lagi. Tu meaning untuk kenaikan ni at least ada short term pump dalam 20-23. kekuasaan quarter key level ni, kemudian kita akan expect untuk mungkin end of the year kita akan ada dropping untuk kita punya bottom kawasan 10 ke 14k sebelum kita ada good rebound untuk sideways antara 2 tahun antara 28 ke 20k sebelum 25 kita ada bull run. So itu yang expected untuk long term. So meaning untuk kita punya analisis untuk di crypto secara keseluruhan ataupun market secara keseluruhannya masih ada lagi massive downtrend. So apa pun kita tengok macam mana, mungkin bulan 10, bulan 11 kita akan ada sedikit release bound untuk completekan kita punya double bottom. Even double bottom ni pun tak tinggi mana pun, hanya at least dalam kawasan almost dalam 28k saja. So ini kalau ikutkan ya dalam kawasan 28, 29, 30 ikutkan kat sini kita ada sedikit aku kata bullish gap. So bullish gap yang tu maksudkan adalah di kawasan ni, dalam kawasan ni kita ada bullish gap kawasan ni almost dalam 28k. So ada possible untuk kita sampai kawasan 28, kemudian barulah kita akan ada another massive drop. So apa pun kita tengok macam mana pergerakan untuk short term untuk pagi tadi Zul punya position, tengok macam mana. Mungkin besok mungkin ataupun Zul akan holding lagi, tengok pergerakan macam market untuk hari ni. So kalau ikutkan ni US muka ni, kalau ikutkan good untuk kita rebound sikit. Sebab apa? Ada sedikit aku kata news yang positif. So kenapa kita berlaku rebound? Tadi kita ikutkan di Bitcoin melakukan dropping dan satu candle merah kemudian terus candle hijau balik. Kenapa? Nanti tu akan terangkan sikit kenapa kata Bitcoin ataupun kripto sebenarnya ada sedikit massive pump selepas sebaik saja jerempau mengenai kripto tadi. Topik kripto. So topik kripto ni disebabkan CBDC tak sebab apa CBDC ni tak silap tu adalah currency untuk Fed punya kuartal stabil coin yang kuartal sedang diusulkan oleh Fed untuk kata Fed punya ataupun US punya stabil coin lah. So kenapa? So pertama kali dia cakap tadi kuartal pros and cons MNC masih lagi dalam kajian kuartal pros and cons tu, meaning kata dia dalam segi kajian baik dan buruk dia, tapi kuartal dia tak menidakkan, dia tak menghalang untuk kuartal sebarang innovation. Nanti tu pada stabil coin nanti tu akan terangkan sikit. So kemudian kita akan tengokkan untuk ke no proceed until law and high agreement. So apa maksud dia tadi? CBDC tu tak akan dilihat sanakan lagi selagi until law enforcement dan juga kuartal daripada high rank punya approve lah. So ini apa berlaku kita tengok untuk di sini mostly kita akan tengok next bulan mostly kita akan tengok ada law enforcement. Apa itu law enforcement? Kita akan tengok ada regulation mengenai stabil coin. Itu yang poin kedua je, kena stabil coin. So pada ni sebab CBDC kemudian potential law enforcement. So ini kita akan tengok akan ada berlaku regulation untuk protection dan juga law enforcement. Tu CBDC ni kalau nak Fed nak laksanakan, Fed nak at least ada protection dan juga law enforcement. Apa tadi? Senang kata rule regulation lah. Tu next bulan tahun 2025 tu jangkakan adalah efek yang besar mengenai rule regulation. So meaning kita akan ada regulation tentang stabil coin. So baik buruk tu ada baik ada buruk je, tapi Zulmo nampak lebih kepada kebaikan untuk more long term. Kemudian kita akan tengok juga untuk lagi tentang pasal apa tadi. Kita akan tengok daripada stabil coin. Dia ada cerita pasal stabil coin tu. Dia pengacara dia ada tanya pada jerempau pada stabil coin. So ada stabil coin ni akan dihalang tidak sebenarnya. Stabil coin ni ikutkan tadi jerempau tak halang sebab apa? Dia consider a good innovation. So good innovation tapi lack of regulation. So sebab tu cakap tadi untuk long term yang untuk currently mungkin kita tengok stabil coin agak tak regulation, tapi next sebulan kalau kita dapat regulation untuk stabil coin, kita akan nampak ada more keyakinan lah untuk market untuk more lebih kepada keyakinan untuk lebih banyak company ataupun fund yang lebih besar untuk masuk duit dalam stabil coin. So ataupun nak simpan duit tu dalam stabil coin. Sekali nak simpan stabil coin, anda tengoklah apa yang berlaku di Celsius, apa berlaku di 3Arrow, apa berlaku di Luna. Itu yang efek yang berlaku bila stabil coin tu tak ada regulation dan tak ada reserve yang betul. Contoh reserve yang betul contoh macam mana? Contoh dia kata kalau ada stabil coin tu ada 10 bilion, so meaning dia ada 10 bilion dalam USD dollar. So itu yang nak diregulationkan, nak diperkenalkan untuk setiap siapa-siapa saja yang buat aku kata stabil coin. Tu itu nampak tadilah full revision. So next apa lagi kita tengok untuk kita tengok ada juga aku kata payment, ada dia cerita sikit pasal crypto backup aku kata payment method maknanya. So sebab tu kalau anda tengok dia punya crypto maknanya, dia punya crypto mostly major adalah Zul invest kepada untuk long term lah aku kata payment method. So kenapa payment method untuk long term? Jadi bila stabil coin itu di regulation kan, so meaning bila banyak regulation tu meaning in future kita akan nampak kita boleh payment tak gunakan dolar, kita boleh stabil coin bayar kepada aku kata pengguna, kita akan bayar pembelian kita lah. So meaning itu untuk long term maknanya cantik maknanya, sebab tu banyak invest kepada payment. Contoh tu ada apa, Harmony One, ada Koti, ada VChain, ada VRA, ada Zilliqa, Telos, Hbar. So banyaklah aku kata mostly coin-coin yang Zul good fundamental ni adalah Zul more target kepada payment punya platform. Contoh aku kata Polygon, Matic pun ada antara platform yang aku kata ada aku kata payment juga. Aku kata bukanlah dia payment tapi dia bridge kepada payment. Banyak aku kata dalam projek-projek Matic itu sebenarnya ada payment aku kata punya payment punya projek. So banyak sebenarnya. So ada good untuk Cardano, ada Koti, ada joint venture dengan Koti. So sebab tu Koti ni pun nanti Zul akan tambah lagi lah. Even walaupun Koti currently Zul tengah aku kata negative profit banyak 80%, tapi price Zul akan expect untuk dapatkan kalau drop lagi Koti ni Zul ada expect untuk dapatkan 10,000 coin untuk net. Kalau drop lagi untuk expectation untuk dalam 3 sen ke 1 sen, Zul akan grab another completekan 10,000 coin. Kalau Zul ada 1,000 coin untuk Koti, Zul akan target dalam 10,000 coin dalam 3 sen 1 sen. In case kalau kita tengok dapat rezeki untuk Bitcoin drop dalam kawasan 14 ke 10k. So itu Zul punya plan untuk Koti untuk long term. So itu saja punya yang tak banyak pun. Itu saja. Tu tadi kita tengok polisi akan diperketatkan CBDC kemudian stabil coin. Sebab tu kita tengok masa ucapan stabil coin ni kita tengok kata Bitcoin sedikit melakukan recovery. So apa pun kita tengok macam mana untuk di Bitcoin still lagi Zul nampak di 1 hour. Di 1 hour kita ada sedikit momentum untuk melakukan kenaikan sebab apa RSI berada above 50 dan stock RSI berada below berada di oversold. So ada untuk short term 1 hour ataupun malam ni kita at least mungkin akan ada berlaku peningkatan. Cuma halangan ni adalah nampaklah di 4 hours saja. Kenapa di 4 hours? Di 4 hours kita tengok RSI kita berada di overbought, RSI kita below 50. So meaning untuk melakukan kenaikan ni kita hanya perlu volume aja. Macam mana volume? Ialah volume yang kita tengok adalah RSI ni above overbought, stock RSI ni berada kawasan ni, meaning kita akan breakout kita punya sedikit kawasan ni. Breakout kawasan ni, so align untuk kita kawasan ni. Apa berlaku nanti RSI sedikit cooling down, stock RSI cooling down, meaning kita akan nampak breakout, retest itu kita akan nampak untuk cooling down RSI MA50 ataupun oversold dan stock RSI tu persilah berada oversold. So meaning barulah lebih aku kata momentum ataupun lebih clear untuk kita katakan price tu akan melakukan peningkatan. So itulah untuk short term long term. Tu apa pun position pagi tadi Zul dah buy pun di Bitcoin RM500, kata di Ethereum RM500, Chainlink RM500, juga kata Uniswap RM500. Hanya buy di Luno. So RM2,000 untuk hari ni. Kita tengok macam mana rezeki, adakah rezeki atau ada pun kita akan terus drop. Kalau drop taklah Zul akan holding saja. Tapi pun untuk expectation untuk short term kita akan gain at least untuk Bitcoin at least sampai dalam 19 ataupun line atas ni 19.6 ataupun line putih ni sebelum kita ada massive rejection ataupun breakout ni kita boleh katakan seringnya breakout ni kita ada opportunity, kita boleh kata monitor untuk pergerakan opportunity untuk double bottom ke 28. So adakah berlaku tidak bergantung kepada market, tapi possibility yang tinggi boleh berlaku. Ikutkan daily pun kita nampak kata sedikit positif, iaitu stock RSI berada di oversold. Hanya stock RSI saja yang above sedikit. So meaning sekiranya kita berlaku sedikit rejection kawasan ni dan stock RSI drop balik, so daily adalah good untuk momentum untuk ni atas. So daily tu meaning dalam weekly lah, mesti dalam habis bulan ni mungkin kita akan tengok macam mana untuk mungkin akan membantu data yang membantu kita tengok 13 bulan nanti, iaitu CPI data adakah berkurangan. Sekiranya kita dapat CPI lower lebih 8.6, so meaning dua nampak ada good opportunity untuk kita drive price Bitcoin naik at least untuk sampai balik ke dalam 23 ataupun 24 ataupun kita masuk balik dalam channel yang besar ni. So itulah yang tu targetkan untuk kata current time ataupun medium medium term ataupun short term untuk kawasan dalam 23 ataupun 2020. Medium at least kita akan dapat pembentukan untuk di double bottom. So guys, rasa itu saja nulis untuk pagi ni. So dah lama pun, harap itu yang dapat membantu anda. Tu tak banyak pun tu nak sharekan sebenarnya. Itu yang tu dapat sikit daripada untuk fact meeting tadi. Tu kalau siapa nak tengok sebelum lepas ni boleh tengoklah kuartal di Federal Reserve ni, kemudian tarik saja untuk di event dan pergi saja di kalender, take kalender, nanti dia akan keluarlah macam ni. So take kalender kan contoh tadi kita akan tengok di kalender. So dia akan keluar macam ni. So contoh berapa 8 ada live. So kalau next ada lagi ucapan, anda boleh tengok kawasan ni bila tarikh ada ucapan tengah live tu anda boleh tengoklah sendiri di kawasan ni. So apa macam biasa kalau ada pakcik jerempau ucapan jelah dia akan buat live. So live ni memang expectation lama sikit 1 hour. So apa pun kita tengok untuk next quarter date yang kita nak tunggu adalah 13 hari bulan. So 14 ni tu akan pergi KL, tu akan pergi KL jap, ada job sikit. So ini 13 bulan ni kita akan tengok 13 bulan macam biasa nanti tu akan buat live juga 13 untuk tengok quarter CPI data, berapakah CPI data ikutkan CPI data. CPI data kita nak tengok release date adalah tarikh ikutkan 13 hari bulan pukul berapa? 8.30. So ni tu akan quarter online pula. Tu akan live awal sikit iaitu Julai 13 ni. 13 Oktober 8.30. So ni mungkin tu akan ngam-ngam mungkin 8 suku ataupun mungkin tu akan live 8 suku. Sebelum 8.30 tu kita tengok CPI. So hopefully CPI kita dropping good untuk Bitcoin sedikit recovery. So apa-apa kita tengok macam mana. Hopefully tak ada berlaku sebarang pergerakan yang dump untuk pagi tadi. Untuk adalah ada sedikit bullish untuk kripto sebenarnya, tapi untuk market secara keseluruhan nampak still lagi kuartal dolar sedang mengukuh disebabkan apa kita tengok tadi jerempau kata polisi akan terus berlaku peningkatan. So kita tengok macam mana, ada short term untuk dropping dan long term still lagi kita akan ada untuk dolar terus melakukan peningkatan. Untuk dolar ni tu ada target untuk di weekly tu dalam 120 123. So untuk price kuartal dolar naik sampai ke 123 ni adalah possible kita punya untuk journey untuk Bitcoin sampai ke kawasan 10k. Tu journey kawasan end of the year. Itu nak tengok 25 pun kawasan ni tu nampak tu lama nak sampai tu. Ni weekly punya chart sebenarnya. So mostly kita nampak di kawasan ni kalau tengok kita akan tengok daily lah. Daily kalau akan daily so mostly dalam tahun 23 atau hujung tahun ni. Hujung tahun ni adalah dalam 22, 23, 24. Okey. Ini adalah kita punya monthly. Kita tengok monthly punya date. So ada opportunity maknanya untuk sampai di kawasan ni nanti kan 22 ending. So kat sini 22 ending. So meaning kita tengok ada opportunity untuk naik at least sampai 21, 23 untuk dolar. So meaning dolar akan terus melakukan pengukuhan. So untuk long term ada lagi expectation untuk Bitcoin boleh drop lagi. So tengok macam mana. Untuk short term tadi sudah buatkan. Untuk long term still lagi kita nampak dolar akan mengukuh disebabkan kita akan ada lagi kenaikan. Jerempau cakap ni polisi akan terus diperketatkan. Bila berketat aku nampak kita akan nampak lagi ada kenaikan untuk interest rate. So interest rate akan naikkan cuma naik banyak ataupun sikit. So hopefully bulan ni kita nampak inflation dropping lagi mungkin 8.0 ke ataupun mungkin daripada 86 mungkin 82, 83 at least dropping. Kemudian kita nak tengok interest rate tu tak naik dengan tinggi, at least below ataupun kembali balik kepada dia punya Fed punya kuartal target iaitu 25 base point setiap meeting. So mostly dia punya target lah tu. Kalau dapat balik 25 base point meeting kemudian inflation drop, tu meaning adalah good untuk kita tengok kuartal Bitcoin recovery dan dolar kata naik. Cuma kita nampak kata price tu tak drop dengan drastik lah. So guys, rasa itu saja untuk malam ni. So tak ada sebarang request. Hopefully pagi besok anda nak tengok request, anda boleh tengok di pagi besok punya pagi tadi punya kata review. Anda boleh type di ruangan komen. Kemudian ikutkan pagi tadi tu ada review. Okay, yang ni DSY bukan 13 jam tadi. Anda boleh tengok balik kata komen kata review pagi tadi. Kemudian nanti anda type saja ruangan komen apa saja permintaan untuk allkan anda type saja ruangan bawah ni. Nanti pagi besok tu akan tengok dan pagi besok tu akan ulaskan sebarang permintaan anda. So guys, rasa itu saja untuk malam ni. So malam ni agak boring untuk kita tengok market. Itulah kita tengok ni, tak ada pergerakan drastik untuk malam ni, tapi kita dah nampak untuk short term dan long term punya movement. So hopefully untuk Bitcoin malam ni ada opportunity untuk pagi besok. Kalau ada berlaku peningkatan, tu akan exitkan position yang tu masukkan pagi tadi. At least untuk position ikutkan di Bitcoin ni, kat mana tu nak close, tak jauh pun, hanya untuk dapatkan price target ini saja, at least point of breaking. So dalam kawasan ni, dalam kawasan 19.7, 98, naik saja sampai key level ni. Kalau ikutkan kita ada beberapa key level kawasan ni almost. So dalam kawasan ni, kalau price Bitcoin dapat naik kawasan ni pagi besok, kalau dia akan cross lah, dia akan close punya short term gaining. Kalau drop tak apalah, kita akan holding saja untuk long term. So guys, itu aja untuk malam ni. Thank you for like, subscribe, share kepada rakan-rakan anda lain. Semoga jumpa anda di live malam besok, jam besok. Besok mungkin tak ada live, nanti tengok macam mana, nanti dia akan updatekan balik, tapi mostly dia akan ada live lah untuk pukul 10 malam. Guys, itu saja untuk pagi malam ni. Like, subscribe, jumpa anda di next review. Assalamualaikum, bye bye.